In this video, I will backtest this 5-minute scalping strategy created by Online Trading Signals to see if it could actually generate us at least 7% profit per day. I will backtest it 100 times with an initial account size set at $1,000 with 1 to 1.25 risk-reward ratio. For my backtesting, I always use Trader Edge because it's really easy and convenient. All you need to do is to set up your account size and the profit and loss per trade. Trader Edge will give you all the information you need about the strategy, such as win ratio, profit and loss, profit factor, and more. You can also save your favorite strategy to the strategy library, and besides their amazing backtester, they've also got plenty of other tools that will 100% make you a better trader. And one of my favorite parts about this website is this indicators and strategies menu that's constantly being updated. Here you can find and download some of the best indicators and strategies for TradingView and MT4 platforms. So feel free to sign up for Trader Edge. They got a 7-day free trial. I'm gonna leave a link to it in the description below. Okay, I'm gonna do my backtesting on BTC USDT, and the creator of the strategy mentioned that it works perfectly well on a 5-minute time frame. This strategy consists of 3 well-known TradingView indicators. For the first indicator, let's search for parabolic SAR. For the second indicator, let's add 10-in-1 moving average. This one by Himanshu. And for the third indicator, we will need to add the squeeze momentum indicator. This one by Lazy Bear. Okay, now we need to make some slight adjustments to these indicators. So first of all, let's change this EMA length from 200 to 100. And let's change its color to green. Let's make the parabolic SAR colored in green too. Okay, the strategy is complete. Now let me briefly explain how these indicators work. So first of all, let's start with this parabolic SAR. This indicator basically appears as a series of dots placed below or above the price. If the dots are above the price, the market is considered in a downtrend. And if the dots are below the price, the market is considered in an uptrend. And every time the dots shift below the price will more likely continue to rise. And exactly opposite is true when the dots shift above the price. We also have this exponential moving average on our chart, and this is going to be our baseline. This indicator will help us eliminate bad signals. And for our third confirmation, we're going to be using this squeeze momentum indicator. This indicator shows the periods when volatility increases or decreases. In other words, when the market goes from the trend into flat movement and vice versa. The black crosses on the midline show that the market just entered a squeeze, thus signifying low volatility. The grey crosses signify the opposite, a squeeze release. However, for this particular strategy, we're not going to be taking into account these crosses. All we need is basically this histogram. Okay, now let's actually understand how to trade with this strategy. So for a long position to be valid, we first need to have the parabolic SAR shift below the price. And once we have that, we will place a horizontal line at the very last dot, which was above the price. Now we basically want the price to breach this level. This means that the price has to cross and close above it. This breakout can happen anytime during the parabolic SAR being bullish. The price action and the horizontal line have to be positioned above the baseline. And finally, we need to have the squeeze momentum indicator colored in green or being really close to turning from red to green. And once we have these conditions met, we will go ahead and place a buy order at the close of our trigger candlestick. The stop loss will be set below the candlestick we had the last bearish parabolic SAR signal on. We see it's this one right here. And our take profit target will be set at 1.25 times the risk. We see we got our take profit target hit on the very next candlestick. Exactly opposite is true for short positions. We first need to have a new sell signal issued by the parabolic SAR. Next thing we do is we place a horizontal line at the very last bullish parabolic SAR dot. We also have to remember that the line and the price action have to be below the baseline. Okay, now we're going to be waiting for a breakout. Okay, so this wick is not considered as a breakout because the price didn't cross and close below the line. Okay, so this is where we finally had the breakout. We see that the squeeze momentum indicator is also being colored in red. Our stop loss will be set slightly above the candlestick we had the last bullish parabolic SAR signal on. And we're going to be targeting 1.25 times the risk. Okay, let me give you a couple more examples. So here we see we've got a new bearish signal and now we can place the line. And we see the price didn't breach it, so this would be a false signal. We also see that the parabolic SAR issued a new bullish signal right here, but this signal wouldn't be valid because the price action and the horizontal level are below the baseline. Now let's take a look at another short example. So we see the price action did cross and close below the line. And if we take a look at the squeeze momentum, we see the indicator is about to turn from green to red. So we can definitely place a sell order. And the reason the risk-reward ratio is only 1 to 1.25 is to increase the win rate. We see if the risk was 1 to 1.5, for example, this trade wouldn't be successful. We see the strategy is doing a pretty good job at eliminating trades when the market is moving sideways. These long signals weren't valid. We see in the first example the price didn't breach the level, and in the second example we didn't have a confirmation from the squeeze momentum indicator. Okay, let me give you one more example. This one is a bit complicated. So here we see we've got a bullish signal. The horizontal level and the price action are above the baseline. However, the squeeze momentum indicator is not even being close to turning from red to green. So we kind of have to wait for it to catch up. But remember, the parabolic SAR has to stay bullish this whole time. And we see we finally had the squeeze momentum caught up. And this trade turned out to be successful. Okay, let's now do our backtesting and see how profitable this strategy is. Okay, so after 100 trades, the win rate for the strategy is 57%. To be honest, I did expect it to be a bit higher with such a risk-reward ratio. We also increased our account size by 71.39%, and I found those 100 setups within 2 weeks. So that's an average profit of 5% per day, which is really close to the numbers promised by online trading signals. The profit factor is 1.66, and we had 5 consecutive wins against 4 consecutive losses. So yeah, pretty good results to be fair. However, I do believe we could improve the strategy so that it gives even better results. Okay, so I have one idea on how we can improve this strategy by eliminating even more losses when the market is ranging. For that, we first need to add a second moving average. So let's enable this simple moving average and set the length at 50. Also, let's change its color. And the second step will be to get rid of this squeeze momentum indicator and add HVI indicator to our chart. Now let's change some parameters. So we want to change this number from 3.6 to 1. Okay, the setup is ready. Let's quickly understand the trading rules. So the rules are pretty similar. For a long position to be valid, we first need to have the parabolic SAR shift below the price. And once we have that, we will place a horizontal line, just like we did in the previous strategy. So the candlestick has to cross and close above the line. The price action and the horizontal level have to be positioned above the moving averages, and the 50 SMA have to be above the 200 EMA. And for our final confirmation, we will need to have a green bar on this volume histogram. Our stop loss will be set at the parabolic SAR dot, which is below the price, and this time we will be targeting 1.5 times the risk. Exactly opposite is true for short trades, so the 50 SMA has to be below the 200 EMA, the parabolic SAR has to shift above the price. If the bearish breakout doesn't happen on the very first candlestick, we can wait for it while the parabolic SAR is being bearish. Also, the price action and the horizontal level have to be below the moving averages, and we need to have a red bar printed on a volume histogram. Our stop loss will be set at the parabolic SAR dot. Also, another important rule to understand, if for example you had a breakout but the volume wasn't quite there yet, you do not wait for it to catch up, you just skip this trade and look for better opportunities. So you can wait for the breakout, but you cannot wait for the volume. Okay, I hope you have understood the rules for this strategy, so let's do our second backtesting and see if the results are any better. Okay, so the second backtesting is done and the win rate for this strategy is 61%. We also increased our account size by 175.99%, which is really good. However, it did take me a bit longer to find those 100 setups. I found them within 32 days. The profit factor has also increased and we had 9 wins in a row against 4 losses in a row, which is quite amazing. You can definitely try to improve this strategy even more, and if you have any ideas, please let us know in the comments down below. Okay traders, I hope you enjoyed this video. Thanks for watching and see you in the next one.